Hi, welcome to another edition of CMS Forex News. My name is Andrew Pang, and today is Monday, September 8, 2008. Over the weekend, the Treasury Department, Federal Reserve, and the Federal Housing Finance Agency took over Fannie Mae and Freddie Mac in a move to soothe credit markets and shore up confidence in the housing market. A big sigh of relief was heard around the world, and global equity markets posted strong gains. The Forex market responded by boosting the value of higher-yielding currencies and pumping some life into carry trade pairs. Many pairs, such as the dollar-yen, had big gaps between Friday's close and Sunday's open as traders put in buy orders over the weekend. The pair traded around 108.65 overnight, but dipped down slightly in New York trading. U.S. stocks also gapped open higher, but were giving up some of those initial gains in New York morning trading. Another pair that follows investor sentiments and equity conditions closely is the Euro-Swiss Franc. It too had a large gap at its Sunday open, jumping 170 pips from Friday's close to trade above 1.6050. European stocks traded higher, but during the New York session the pair fell to test 1.5950. In a fundamental release, the Sensex Investor Confidence Index deteriorated to negative 20.2 for September, a fall of almost 5 points and the worst overall level in more than 5 years. The current conditions sub-gauge led the decline as GDP growth stalled and contracted in the second quarter. The euro-dollar opened higher and rose to test above 1.44 but fell rather sharply in the European session. The euro slid 350 pips from that high to trade near 1.4050 by 2 p.m. Eastern, which is a fresh 11-month low. In the UK, producer prices fell further than expected in August as the cost of materials and oil declined and the economy slowed. Prices charged by factories slipped 0.6%, the first decline since October of 2006 and the biggest fall since the series began in 1986. Raw materials costs declined 2% on the month. On the year, they were up to 26%, a slower rate than July's figure of 30.1%. The data should alleviate pressure on the Bank of England, which has not been able to cut rates as it wanted because of the CPI inflation rising to 4.4% in July. The pound-dollar pair rose over the weekend and peaked overnight near 1.7950. From here, the pound tumbled more than 450 pips to set an intraday low near 1.7470. That's a fresh 2.5-year low for the pair. The pound's losses accelerated following the PPI release. The pound-yen saw even more volatile action. The pair hit the 195.60 level overnight, then proceeded to slide almost 600 pips to trade near Friday's close. The lower PPI data is consistent with outlooks that inflation has peaked, suggesting that the Bank of England may soon have the scope to cut rates. In Canada, building permits rose 1.8% in July after a decline of 5.3% in June. The result surprised forecasts, which had predicted another fall. The housing market in Canada has managed to stay afloat, and certain provinces are doing very well even as the U.S. housing market remains in recession. The U.S. dollar-Canadian dollar pair rose in favor of the greenback, bouncing up from support at 1.0550. From that low, the pair rallied about 150 pips, stalling for a brief time after the permits release. Other commodity currencies like the Aussie and Kiwi also fell compared to the U.S. dollar. Tonight, the UK will post its BRC Retail Sales Monitor, a monthly GDP estimate, and the RICS house price balance. Australia will release data on home loans, retail sales, and business confidence. Overnight, Germany will post its trade balance, Japan its industrial spending figures, and the UK its manufacturing production. Tomorrow, the US will review data on pending home sales and wholesale inventories. Canada will finish things off with its housing starts. And that's it for today. Tune in again tomorrow at cmsfx.com for more Forex news. Until next time, happy trading.